Hi everyone, thank you for joining us for this week's US dollar index and currency market commentary. You're speaking with Nick McDonald. Looking here at the dollar index chart firstly before we look at some of the spot currencies to see if this will back up our thinking or not. Obviously we've marked out the 76 level. On a monthly chart you'll see just how significant that is, but a major level, and we've had multiple tests and we've continued to have them. We've had them last week as well, price coming up and testing 76 and giving trading opportunities off that level. Continues to do so, however the daily chart there has not really shown us any clear trend, having been pulling back into the moving average sell zone all the way through here, but now pulled back closer to the 50 period and even a little bit beyond the 50 period moving average. Why has that happened? Simply because the weekly chart has had a pullback. So all through here the daily was pulling back to the 10 and 20, where the weekly chart wasn't hardly pulling back at all. Now we've had just a pullback into that weekly chart sell zone, the weekly chart zone around the 10 and 20. Notice I've got the level of 7600 marked as well. We're also in a downtrend. We've pulled back into major resistance now, major support now becoming resistance. We've got a small red candle, and this is looking very, very bearish. This is giving a great opportunity to be short this week on any breakdown through this low, simply because that'll be a confirmed lower high within a downtrend in the sell zone, and we've got this major level, not only a big round number of 76, but also major old support becoming resistance, which we can see here on the monthly. So this has been a topic of conversation for months for me on these videos, and it will continue to be so because it continues to be just such a strong level, continues to give some great trading opportunities. So I'm bearish on the dollar index this week, provided we break down through last week's low before breaking up through last week's high. I'm in fact already short, and I'll show you shortly one of the trades I've taken last week based on the 7600 level. But I'll be looking to add to that short position if we can break down through that low. Let's have a look at a few of the spot currencies here, and I've got a whole bunch of currencies here, all of the ones that make up the dollar index plus a couple more, for example the Aussie and the Kiwi, which are both just currencies worth watching because they're so strong. Every single one of these, with the exception of the CAD and the Yen, are all looking to back up my thinking here to say that the dollar is looking weak. So on the Aussie, let's just go through some of these weekly charts. In fact, I'll maximize the weekly charts here a little bit so we can see them better. Weekly chart, uptrending, pulling back into the buy zone, small green candle, a break up through that candle will be looking bullish for the Aussie and bearish for the US dollar. Looking at Euro dollar, going to be similar to the Aussie here. We've run up, we've pulled back into the buy zone. It's not the most bullish of candles, but we're in the buy zone, and any break up through there will be a continuation to the upside with a stop below the low. Looking at cable, very similar, showing here strong British pound versus a weak dollar. We've moved up, we're pulling back into the buy zone, small bullish candle, a break up through there will be an indication to the upside. Kiwi dollar is actually one of the stronger ones in terms of it is a not so much a small green candle, it's a big green candle, and any break up through that will be a good positive sign of a move to the upside. Let's have a look at dollar Swiss. This is so closely correlated to the dollar index, and this is a much more bearish candle than the dollar index had for the week. So we've pulled back into that weekly sell zone, red candle breakdown. Just look at all of the times here where if you're trading similar patterns where price pulls back and you get a red candle in that sell zone and then a breakdown through it, what happens? This is exactly why I'm looking to trade this pattern, and it's happening again right now. Red candle in the sell zone. If we break down through that low this week, the probability is for history to repeat itself, for patterns to reoccur, and for the price to continue to the downside. Last one here is the Swedish krona, and we've got a similar pattern with a red candle in the sell zone. Any breakdown through there will be a continuation down. Now the only exceptions here, dollar CAD. And even on this, even though we don't have the red candle, that's the only real thing, we've still got a downtrend and we're still in the sell zone. We just don't have a red candle. That's the only reason I say it doesn't back it up completely, but it nonetheless does back it up, and it still looks bearish, as in it's in a downtrend likely to continue. So we've got a very bearish looking US dollar this week, and we've got lots of opportunities. If price does rally, we've got opportunities for trades around 7600, and if price declines, we've got opportunities to be looking to get short as price breaks down below the exact low of that chart is 7508. So 7507 for me will be a trigger to be looking to get short to the downside there. Let me just show you another place where there's opportunity. And coming to a 4-hour chart here, and these lines that are marked on the chart are actually the lines from a short trade I took myself last week. I'm actually just going to tack on to the end of this, just 1 or 2 minutes. I'm going to go and edit down another video I did just to show you the live charts back at that time, and to show you a live trade I took and the reasons why I took it. So this is a trade I took last week, and I record a lot of my live trades on video and put them out. So what I'm going to do is I'm going to go show you, it will be historic, but I'm going to show you that video just for something a little bit different, to show you the reasons on this candle back here, why I was looking to get short, where I did get short, where my stop losses were placed. And that trade, by the way, I've taken some profit before the weekend, last week, and I'm also still short, and I used that as an entry into a trade, an early entry into a trade, which I now think is likely to continue this week and give me that weekly chart trigger, which for me would be a chance to add to the position. So that will be, I'll sign off after that one, but I hope that you enjoy this little add-on just as a little sample of a real trade I took last week. Happy trading all. I'll show you the entry and stop first, and then I'll discuss the reasons why. So I'm looking to get short as we just break down through the low of these last two 4-hour candles. And if it breaks down soon, which is now looking unlikely, stop option 1 will actually be not just above that high, because we've got the 76 level so close. So stop option 1 is probably around about 76.0, well, let's say 06 to be safe. And stop option 2 is if we don't break down, then it's not much higher, but something like 22, in fact, whatever just 1 pip above that high is. So let's look at some of the reasons why. Okay, so reason number 1. We were uptrending here on this 4-hour chart. We've made divergence on each one of these highs. We've been diverging. We've made 3 consecutive higher highs, 3 consecutive lower highs on both indicators. So strong 3-wave divergence there. Equally, if this candle, if we now break down, we'll be confirming the lower high here. We've got a red candle. If we break down through that low, we'll be confirming the lower high. And I'll be looking for a complete change of trend and a breakdown through here and a breakdown for lower lows. We also have some kind of weak divergence on the RSI on the 8-hour chart, and it's actually slightly converging on the 8-hour MACD, so there's not really much to read from that. But the real key here, and you'll have seen it if you watch my ICE market updates on Monday, we're pulling back into 7600. 7600 is massive. It's these old lows. This is a monthly chart now. It's these old lows, very, very significant, plus a big number, major support and resistance. In fact, I've got some old lines on here, so they're maybe not perfect, but back here in the past, let's just move this arrow because I'm not sure what that one was relating to, but let's just look back here in the past, let's move that line as well, where the dollar index has been testing 7600 even on a daily basis. It's been really strong. It's found support there, it's found resistance there, and obviously on a monthly and weekly basis it's found that even more significantly and more precisely. But now we've come up, we're testing that again. It's a major level. We've got a red candle, and I'm anticipating here potentially a breakdown through that daily candle. And a great reason to add to that would be maybe even not until next week, but say for example we close this week with a small red candle in the sell zone, then I'll definitely be building up to a full stake trade. That's a long way away. I'll be looking for any other reason to add to it, but I like the short trade and just thought I'd put that out just as a little bit of a view as to how I sometimes trade a little bit more aggressively when I'm sitting here on my own trading the markets, and where I've got a level I really like the 7600 level on the dollar index. Happy trading all. Hope it helps.